Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. It's Friday. We made it to the end of the week. What do we got going on today? Markets are down today. Dow's down about 200. Nasdaq's down about 250. Today is what's called options expiration day. Now, the options expire today, and this creates a little bit more volatility in the market. We can have more downside or upside volatility. So expect some of that as we go into the close of the market today. Now, what we've been having over the past month really is, well, the market's been going straight up pretty much, right? But in the last week, the volume has been getting very light. So it's been rising still, but on light volume. Now, we came right up to the 200-day moving average on the SPY, and we got rejection off of it. Now, I do think they're going to try to make another run up to that 200-day moving average, and we'll see if they can get through it. But that's where we're at right now. We've had rejection, and we're coming down off that 200-day. Now, even if we get through the 200-day, I do think this rally is coming to an end. This has been a short covering rally, a bear market rally, if you will. It's really been the institutional investors against the retail investors. The bulls and the bears, they're battling it out. The institutions, they're betting the market's going to come down. The hedge funds, they're betting down the downside. Now, the retail investor, he thinks the market's going to keep going higher, going up to new highs. Now, I'm kind of in the camp that we're going to get that pullback. We're going to get the retracement back to, well, I think the June low will hold, but we're going to get a pullback down in that direction. Now, why do I think that? Well, the HYG, we talked about that on the last broadcast. The HYG is leading the market down. That is a leading indicator, and it's been moving down, and the market tends to follow that. Okay, the other thing, the VIX Volatility Index. It's kind of been in this downward pattern. Now, if it can bust above the trend line, when it gets above that trend line, it's not good for the S&P at that point. The S&P will start to come down if the VIX rallies up higher. So those are two things. And the third thing is, well, if you look at Bitcoin today dropped about 2,000. Now, the Bitcoin and the NASDAQ, they've been moving pretty much side by side. They've been tied together. So now we got the big Bitcoin drop. I'm expecting, well, the NASDAQ will probably start to fall also. So that's what we have going on in the stock market today. We'll see how that plays out next week. All right, let's move over to the real estate market. Now, the real estate market is fascinating. We had CNBC come out and say that real estate is in a recession. I didn't think mainstream media could use the word recession, but they say real estate's in a recession. Now, the economy, of course, the economy's not in a recession. Oh, no, not at all, not at all. Economy, they say, still doing fine. I would disagree with that, but that's what they tell us, that the economy's not in a recession, but CNBC is allowed now to say that real estate is in a recession. Okay, so now we get a lot of comments in the section, and it's kind of funny. A lot of people say, well, not in my area, it's not. We're still getting record highs. Now, it is true that real estate's very, very local markets. All right, now in my area, I'm going to tell you what's going on in my area. Okay, so we got San Jose, California, which is in the South Bay, and then we have San Francisco up here. So San Jose's down here, San Francisco up here. All right. So in San Jose, California, we're down over 10% on prices already. Prices have dropped 10%. Now, when I go on searches in San Jose, I notice that the days on market are staying a lot longer, but the price reductions are really hitting hard. About 50% of the properties in San Jose have a price reduction, and the average price reduction is $93,000. That means they're reducing the price to the downside. I can find many properties which are already reduced 20 or 30% from the asking price that they were hoping to get, the price that Billy Bob got, because Billy Bob got out at the high, and these asking prices are already down 20 or 30% from there, and they're still not sold. The days on market are starting to expand. So sellers, they're getting anxious. All right, they're getting anxious. Well, that's the story down in San Jose, but let's talk about the story up in San Francisco. Now, San Francisco, back in April, The median price of a home was over $2 million, over $2 million, $2,050,000 to be exact. That was back in April, but now we just got the July numbers. The July number, the median home price in San Francisco was $1.68 million, so $1,680,000. It dropped over $300,000 already, right? It's already dropped over $300,000. Now, these are two areas, San Jose and San Francisco. Now you have this corridor in between. Now this corridor, it makes up a lot of areas, the San Mateo, the Mountain View, and this corridor has remained a little bit stronger. It hasn't come down as much yet. But in this corridor, there is a lot of luxury homes. It's a very pricey area to live in. Okay, and some of these homes are up in the $6, $7, $8 million ranges. Well, some of these homes have already had $1 million price reductions, a price reduction of $1 million. I mean, to me, that's pretty impressive, right? That a price reduction could be $1 million off already. Well, that's fascinating to me now. So you do have different areas. You have San Francisco down about 300,000. You got San Jose dropping like a rock, and then you have this area that's kind of holding up a little bit better. Okay, but you got like the traffic. The home traffic has just fallen off a cliff. If I go out to see open houses, which I do sometimes, I go out and take a look at open houses. I like to go the first weekend just to see how traffic is in the open houses, see what the other agents listed at, see if they expect to be reducing the price soon. Well, these open houses, they've really been ghost towns. There's nobody there. It's me talking to the other agent because nobody, and I can talk as long as I want. I can stay an hour or two and nobody comes in. They're really like ghost towns. These used to be so crowded, so crowded. I mean, there'd just be a herd of people coming through. If you wanted to talk to the listing agent that was holding the open house, you'd have to wait in line. There'd be 10 people in front of you waiting to talk to them, but now they're ghost towns. It's really funny how it's just kind of just changed, right? It's kind of changed. The whole market's changed. Now, of course, not in your area, but in my area, that's what's going on. Now, here's what's really fascinating to me. I'm sure you've heard about this already, but a lot of buyers, they're backing out of the contracts. Now, they sign contracts, they go into escrow, and they're backing out of the deal. They're just saying, no, 15% across the nation, 15% of buyers across the nation are backing out. Now, how many transactions is that? That's over 50,000 transactions just in the month of July that the buyer, they put in an offer, the offer was accepted, it went into escrow, and then the buyer backed out. 15%, 50,000 transactions. Now, in a lot of cities, it's up at 25%. Cities like Las Vegas, cities like San Antonio, Texas, cities like Orlando, Florida, New Orleans. These cities are at 25%, are falling out of escrow. I mean, that's insanity, right? Now, why do they fall out of escrow? Let's think about this. Well, you know, in the last couple of months, it was interest rates. Interest rates were going up, okay, and the people, they couldn't get the loans to go through, so they fell out of escrow. Well, that's interesting, but here's what people don't really think about. Now, the reason I think about it is because I'm a real estate broker, and this has happened to me a few times. All right, so you get your buyer in there, and they put the offer in the house, and it gets accepted, right? All right, and let's say they put the offer in at, let's say, $1.5 million. Okay, so they're buying this house for $1.5 million, right? And then when they're in escrow, all of a sudden on the same street, a house lists for $1.4 million that's bigger than the house they're buying at $1.5 million. Well, if you're the buyer, you're going, well, wait a minute. I want that house for $1.4 million. I don't want this one for $1.5 million. So they come to the agent. They go, Mike, get me out of this. Get me out of this. Now, there are some ways you can get people out of this. You got these contingencies to remove. And one of the contingencies that is most likely one that you use to get out of the deal is, well, the home inspection. You get a home inspection, you get the inspector to come through, right? And anyways, it could be anything. They could find any problem, and that gives you an out. That gives you a way out. Now, the seller might even say, well, hey, we'll fix that for you. But no, you can still get out. It's not acceptable to you. So there are ways to get out of the transactions. And that's why these are starting to fall out of escrow, because other houses are coming up on the same street for a lot less money and a lot better house. And then the seller goes, well, the buyer goes, I don't want to buy this anymore. I want to go buy that one. But then they go into contract there and another one comes up that's even lower and even better. And they go, wait, I don't want that one either. And they back out. And this is what's causing people to back out of these deals. Now, the seller, when the agent, like I have to tell the seller a lot of times, my buyer doesn't want to buy it anymore. They're getting out on the inspection clause. They're going to get out of the property. And the seller's like, well, wait a minute, and they usually don't bother suing at that point because it takes time and it ties up the property. So the seller now has to go back on the market and compete with the home that's down the road at the lower price. So they got to drop their price, and that's why you're getting all these price reductions. And when they tell the agents in the MLS listing, they say TFT, which means transaction fell through. And of course, it's at no fault of the property. The property's fine. It's just that the buyer got cold feet. Well, I got cold feet because you're too overpriced and they want to buy the house down the road. But the seller, he still wants to get what Billy Bob got, but he doesn't realize that it's too late to get what Billy Bob got. Now, in your area, I'm sure you can still get the price that Billy Bob sold at, because your area, it's record high. But in my area, I'm telling you, we got San Francisco, we got San Jose. They're both coming down a lot. In the corridor in between, it's going to get crushed also because it just kind of floods into other areas, even your area. Anyways, if you like this talk, give me the thumbs up. Why not? It's Friday. I want everybody to get out there, have a great weekend. Hit that subscribe button so we can talk again next week, because there's a lot to talk about. I'm Tall Mike. Get out there. Have a great weekend. Bye-bye, everybody.